Good afternoon, everyone, and welcome to today's webinar from the Northern Ireland Customs and Trade Academy on VAT and trade between Great Britain and Northern Ireland. The UK has left the EU, and the transition period after EU exit comes to an end on 31st December 2020. From January 1st, 2021, the process for moving goods into and out of Northern Ireland will change as a result of the Northern Ireland Protocol. On this webinar, you will hear about the implications of this for VAT in particular. But before we go into the presentation, we'd like to run a couple of quick straw polls to find out a little bit more about you. So the first of these polls we'll be asking is, are you attending this webinar today because you move goods from GB to NI, from NI to GB, both ways, or none of the above? And while that poll is ongoing, just a couple of quick housekeeping notes. During the course of the next half an hour, please feel free to use the GoToWebinar dashboard to post any questions you may have. Also, we will answer as many of these questions as we can get through in today's session. And we'll also be sending a copy of the slides and a recording of this webinar to anyone who's registered for today's webinar shortly after finishing. So do make sure to really listen in today, do what the presenter will be presenting. So I will give everyone just a few more seconds to answer that poll. Thank you everyone who's answered so far. So I'll close the poll in 5, 4, 3, 2, 1. And to share the results of this poll, so a significant amount trading from GB to NI or both ways, so 45% GB to NI or 41% doing it both ways. Only 4% are moving goods just from NI to Great Britain and 10% none of the above. But we hope you find this webinar useful anyhow. And the second poll I'd like to ask you today is us asking you, where are you from? So are you based in Scotland, England, Wales, Northern Ireland, or other? And at this point, it is my great pleasure to introduce today's speaker in Steve Hudson. Hi, Steve. How are you today?
Well, thank you very much indeed for that kind introduction. I'm very well. Yes, it's looking out of the window and it's not raining for once. So yep, I'm looking forward to this webinar and sharing the information.
Thanks, Steve. Yeah, it's not raining here either, though it's getting slightly ominously cloudy. Steve is a customs consultant for the Northern Ireland Customs and Trade Academy. Steve is an experienced international trade practitioner with over 30 years of experience. He frequently speaks on trade matters and is an experienced trainer on topics such as importing, exporting, AEO, and Incoterms. Anyhow, just to close the second poll and the results. Here we have 57% dialing in from England, or the business is based in England, a third from Northern Ireland, and then not so many people from Scotland and Wales, but everyone here is equally welcome, of course. But on that note, Steve, I don't know if you have any thoughts to share on those polls, but I'd like to hand over to you.
No, it's good to see so many people attending today. It's excellent to see the number of attendees. And good to see the good mix of traders there between Great Britain, Northern Ireland, and obviously from across all the countries in the United Kingdom. So yeah, so if we can move on to the next slide, please. So basically, what we're going to cover today is a quick outline on the Northern Ireland Protocol, which I hope will be people will understand and will have had some kind of exposure to already. But just give you some background on that. And then we'll walk in through the VAT rules that apply, and we'll cover those in a degree more detail. So if we go move to the next slide, please. So as Will said at the beginning, we have the UK has left the European Union. We left at the end of January, and we're in this transition period between now and the end of 2020, where we're still part of the single market, and all the processes as were prior to our departure from the European Union stay in play. But obviously that's going to change with effect from the end of December as a result of the Northern Ireland Protocol. Obviously, the government has established the free-to-use trader support system, and this is a digital-first environment, which is aimed at providing support to all businesses moving goods between Great Britain and Northern Ireland. So next slide, please. So I think it's worth just reiterating how the Northern Ireland trade will change after the transition period at the beginning of 2021. And there are 5 routes that we take into consideration. And I'll just run through those very quickly, just so people have an appreciation of the different processes and how they're likely to change. So if you're looking at, first of all, goods moving from Great Britain to Northern Ireland, one of the main changes or the key changes is this requirement for new declarations for goods moving between Great Britain and Northern Ireland. And those goods, some of those goods may be subject to duty if they're considered at risk of actually moving on to the European Union after they've moved from Great Britain to Northern Ireland. So the second routing is as important or equally important is moving goods from Northern Ireland to Great Britain. And the good news there is that in most cases, goods will move, everything will happen as it does now. There should be no additional processes, no additional paperwork or restrictions, except in some very, very limited circumstances, such as complying with international obligations, such as CITES, or if, for example, you're moving goods between a customs warehouse in Northern Ireland and a customs warehouse in Great Britain. But other than that, there should be, it should be effectively business as usual. So what about moving goods from Northern Ireland to and from Ireland, and indeed into the rest of the European Union? Effectively, it's the status quo. Trading goods will continue unaffected. There'll be no checks at the border, no paperwork, no tariffs or regulatory checks. So it's very much a maintenance of the status quo for goods moving from Northern Ireland to and from Ireland, and indeed from Northern Ireland to and from the European Union. Goods moving from Northern Ireland to and from the rest of the world. Once again, trading will continue broadly as it does now. Northern Ireland will have the benefit of any future UK free trade agreements, which will come into force with effect from the 1st of January. And the UK global tariff will apply to imports that come in from outside Northern Ireland and the European Union into Northern Ireland, unless those goods are considered at risk of moving to the European Union. Finally, transit routes, goods which are in transit. So, for example, goods moving from, from Wales to Dublin and then up to Northern Ireland, they will be subject to some specific processes. Transit declarations would apply, and some traders may have to actually seal their vehicles to ensure that the goods are not interfered with en route. So you can see basically, there are things going to change with effect from the 1st of January, and we'll move on to talk about the VAT implications now. So next slide, please. So what we'll cover under the VAT rules are, what a background to VAT in general, just to level set everybody, an overview of what's going to change, looking at VAT and Great Britain trade, so Great Britain and Northern Ireland trade and VAT applying to that, Northern Ireland EU trade and the VAT aspects that relate to that, and finally the Northern Ireland rest of world trade, and once again really covering the VAT aspects that apply to that trade. So next slide, please. So just to level set here and just make sure everyone's on the same page. Northern Ireland will remain part of the UK VAT system, and that's just to reinforce that the Northern Ireland is, and indeed will remain, part of the UK's VAT and excise system. So, I mean, that just reflects normality across the whole of Europe, really. VAT and excise regimes tend to be national responsibilities, albeit that customs then becomes is not and is covered by the Union Customs Code. But VAT and excise tend to be national regimes. HMRC will continue to collect revenue. That's their responsibility. Nothing will change as a result of the end of the transition period. And it's one of the key elements here from the government has been that they wish to minimise business impact. Their approach from a VAT point of view has to ensure that the VAT processes change as in as small a way as is possible, and to maintain as close a position to the current position as we are. So what they're trying to do there is to, whilst satisfying the requirements of the Northern Ireland Protocol, to minimise the impact on business. So there will be some alignment on some EU VAT rules, and this is outlined in the Northern Ireland Protocol. So Northern Ireland is required to maintain alignment on some admin processes on rules, but only applicable to goods, not applicable to services within the EU VAT directive. So that's the background. So that's the sort of the scene setting bit. So let's now talk in specifics about the aspects related to Northern Ireland and Great Britain, and Northern Ireland and the rest of the world in the EU. So all businesses operating in Northern Ireland will retain their current VAT registrations. There'll be no requirement for a new VAT registration to operate in Northern Ireland. And VAT will be payable on sales within Northern Ireland, and you'll account for those through your UK VAT return in exactly the same way as you do now. So once again, no real sort of fundamental changes there in terms of VAT registration or the need to actually apply for a new VAT registration. And also how VAT will be payable. So next slide, please. So let's now think about movements of goods between Great Britain and Northern Ireland. So effectively, VAT will be accounted for as it is now. So VAT will still be collected through your periodic VAT return for goods sold between Great Britain and Northern Ireland, using exactly the same boxes as you do on the return as now. For sales to both businesses and consumers, VAT will continue to be charged by the seller of the goods as it is now. So if you sell goods from Great Britain to Northern Ireland, you'll be expected to charge VAT at the applicable rate for those goods on that sale. So there will be some small exceptions, such as goods which are placed into a special procedure. So if you're moving goods into a customs warehouse, for example, there will be the importer would be liable, and there's some need to maintain some existing anti-fraud reverse charge provisions, which will stay in force. So next slide, please. So once again, just to go back or continue to talk about moving goods between Great Britain and Northern Ireland, there'll be no border processes. So there will be no border process for VAT on any sales between Great Britain and Northern Ireland, and no direct interaction with customs processes, apart from those exceptions where goods are entering a voluntary special procedure, such as customs warehousing. In terms of reclaiming your VAT, where VAT is shown on an invoice between Great Britain and Northern Ireland, the recipient can claim it back on that basis, subject to the standard rules of VAT recovery. But and goods moving between intercompany movements, so if you're moving goods from, you operate for example, some kind of retail operation in Northern Ireland, and you're moving goods from your warehouse in Great Britain, there'll be a need to account for import VAT, and that will be the seller in Great Britain who will actually have to account for that import VAT. But ultimately, that will be recoverable as input tax on the same VAT return, once again subject to the normal rules. So at that point, can I hand back to Will for some questions, I believe.
Thanks, Steve. Yes, so we're going to do some of your questions and a couple of our questions at the same time. So the first one is a poll from us. It's just a question to ask how you've engaged with a trader support service so far who are hosting this webinar. And the options range from already registered, thinking about it, tried but couldn't work it out, and a couple therefore don't want to sign up, and a couple of reasons there. So first question, and we're getting loads of questions in, and thanks everyone for all of the questions. A few just questions on the last couple of slides, Steve, and I think John sums it up here, John from Reading, in asking, will movement supplies of goods from NI to GB follow the same rules as GB to NI, or is there any differences which need to be known about?
Thank you for that great question, John. That's really useful to actually give the chance to reinforce that. So movements from Northern Ireland to Great Britain will follow the same process as Great Britain to Northern Ireland, with VAT charged by the seller, except for the circumstances that were outlined in the slides. Northern Ireland to Great Britain is only the same if there is a sale or supply. Your own movements, for example, will not be subject to import VAT.
Thank you, Steve. Thank you, John, and everyone else who's asking questions to that effect. And another question here from Holly from Macclesfield. Again, this is one a few people asking. Does the recovery of VAT require the purchaser company to hold a C79 for NI to GB or GB to NI movements? And if I'm correct, the C79 is essentially that's an import VAT certificate. Is that right?
Absolutely, Will. That's totally correct. So the C79 is as Will said, is a certificate you get from HMRC, which details all the VAT that's been paid against your VAT number on imports. And the answer to your question, Holly, is no. In order to recover the VAT, there will be no need to hold a C79 for those movements, just a VAT receipt. This is because VAT accounting is being disconnected from the customs declaration, and as such, those C79s won't be generated. If you look at the C79 now, on there, one of the key fields is the customs entry. Because there's no link between VAT and customs for Great Britain, Northern Ireland trade, those C79s won't be generated for that process.
Thanks, Steve, and thanks everyone again for that question. I hope that's been a useful response. Just to quickly share the results to that poll. So great to have so many TSS registrants with us today, 74% already registered, 13% thinking about it, and only 11% here just to learn about VAT. So thank you everyone for the responses. They're really useful. I'm going to launch just one more poll at this stage and ask another question to Steve, just because we are getting lots of questions in on a similar topic here. So question here, just to find out a bit more about your business and asking you your turnover. But the question we're getting a fair few people asking is kind of where a business moves its own goods from GB to NI. The guidance says the business accounts for output tax and claims input tax in the normal way on the VAT return. Does this simply imply that a VAT invoice needs to be raised to support the recovery of input tax, as you wouldn't normally raise a VAT within the same legal entity? Steve?
Yeah, and basically, yeah, businesses need to keep records to show that the movement of goods between Great Britain to Northern Ireland has been properly treated. However, we don't. There is no requirement. We don't see there being a need to actually raise a specific VAT invoice for those movements. That as long as you have it within your commercial records, and it's shown that the goods have been treated properly, then there's no need to raise a VAT invoice to accompany the goods.
Thanks, Steve, and I hope that's answered a few people's questions there. So again, I'm just going to quickly close this poll, share the response. Again, quite a range of companies, but largely it's companies earning over 5 million in turnover, but a range there. So thank you everyone for answering that poll, and back to you, Steve, for the rest of the presentation.
Okay, thank you, Will. That's great. So starting to talk now about movements of goods. So the goods have now reached Northern Ireland or have started in Northern Ireland, and now we're talking about moving those goods between Northern Ireland and the EU, and obviously that includes Ireland. So for VAT purposes, Northern Ireland will be continue to be treated as if it were an EU member state for goods. The cross-border rules that have applied since 1993 will continue to apply for those goods. So what that means is that if you receive goods in Northern Ireland from Ireland or other EU member states, direct from other EU member states, you'll need to account for acquisition VAT on those goods that have been received. And obviously, goods leaving Northern Ireland for the European Union will be dispatches, and therefore you will need to generate an EC sales list for those Northern Ireland EU movement of goods. So it's the status quo. It is exactly the same as we have operated since the beginning of since 1993, when Intrastat was first introduced. When we join the single market. So that really is exactly the same processes as we have now. So next slide, please. And if we now think about moving goods from Northern Ireland to the rest of the world, so there's some good news here insofar as postponed VAT accounting will be available for rest of world imports into Northern Ireland. And for those who probably may not have heard of this, this basically allows for VAT registered importers to account for and pay import VAT on their VAT return rather than at the point of import. So that's a great easement, and will allow for potentially a reduction in your deferment account, because you won't have to account for the VAT at the point of importation. You'll do it on your VAT return. So for goods if you're selling or receiving goods not exceeding £135, including non B2C to non-VAT registered businesses, if it's a direct sale, the overseas seller will be obliged to register for UK VAT and indeed account for the sale. And VAT on sales through an online marketplace will be collected and accounted for by the marketplace. So Amazon, eBay will be required to account for the VAT on the sales. For consignments of other goods, the normal customs processes will apply, with postponed VAT accounting being available. So you'll be obliged to make an import entry or an export entry, depending on the goods, in line with exactly the same processes that will apply for any other rest of world trade. One thing that is going is low value consignment relief, currently up to £15. That will be removed from mail order goods, and they will be subject to VAT. So next slide, please. So hopefully that's given you some background and some overview of the way in which the VAT processes will change, or indeed will not change, with effect from the 1st of January. So just moving on now to what support can you get from the Trader Support Service. So move next slide, please. So as we said right at the start, TSS, Trader Support Service, is a free-to-use digital service which is aimed to help business of all businesses and traders of all size to navigate the changes to the way goods move once the Northern Ireland Protocol comes into effect on the 1st of January. So what we do is we offer education advice to traders to help them understand the changes, and this webinar is part of that ongoing education process. We're providing a digital first service for declarations for goods moving from Great Britain to Northern Ireland. And that will be based on data that's provided to us by the traders. And we're providing a contact center to allow for traders who have questions to come and ask those questions, pose those questions and get responses, because basically this is going to be a mandatory process. But apart from that sort of that contact center type support, we're not providing a personalized advisory service. So that's not something we're doing. We're not aiming to replace services which are offered by the existing intermediary market, and we don't raise non-standard documentation. So we're not looking at any kind of licenses, health certificates, import or export licenses. That's not what the basis of the trader support service is. So next slide, please. So I did notice that a lot of the callers today, or a lot of the participants today, have registered. If you haven't, I would strongly advocate registering. It's very easy. You visit the website as shown there on the screen, or indeed scan the QR code on the slide to register. That gives you the access to free TSS training courses. Will allow you to apply for an XI EORI number, which is needed for movement of goods in Northern Ireland. And you can take advantage of additional professional advice on the most appropriate customs arrangements to meet your specific needs. So I think the contact center is now available for registration inquiries. So if you haven't registered and you have an interest in moving goods to Northern Ireland, or you have a Northern Irish entity attached to your company, then you really must. I really advocate registering for TSS now, because you don't want to get left behind. So next slide, please.
Thanks, Steve. I think it's time for just a couple more questions. This is a half-hour webinar, so we won't be able to get to everyone's questions today, I'm afraid, but again, I'll try to group questions together as much as possible. And again, this is a question for you. This is for people who have yet to register for TSS. If you could just let us know one of the following options, that would be really fantastic. Thank you. So we've had a few people asking about the VAT return itself, including, this is Kim from Nui, asks, will there be any additional boxes on the VAT return, or will it be the same 9 boxes as now?
And Kim, you'll be pleased to know that that the HMRC is keeping the VAT return exactly the same as it is now with the 9 boxes, and each box will be used exactly as it is now. So that's box 1 for output tax, box 4 for input tax, and so on. So no changes there to the VAT return, or indeed the how you fill it in.
Thanks, Steve. I hope that's helped Kim and others. A question just following on from the NI to EU slide. A few people asked about VAT triangulation and whether you could expand on it. So, for instance, this person whose name hasn't been provided, it says, they understood that if the goods stay within the EU but are invoiced from without, VAT would be 0 rated. And there's also no trade tariff and no external borders are crossed. So yeah, could you expand on triangulation if possible?
Yeah, certainly. So triangulation will continue in the EU, and that's basically allowing goods to you move goods from country A to country B, but you're invoicing from country C. So triangulation will continue in the European Union. That there's no change to that. And provided that the GB business is actually identified for VAT or registered for VAT in an EU member state, they will be able to participate in that in the way they do now, but obviously they'll be using their EU VAT number as opposed to their GB VAT number.
Thank you, Steve. I'm afraid, everyone, running out of time now, so I'll just close and share the results of our poll. Again, thank you everyone for the questions and for responding to our questions. Good to see that a lot of people who have not yet signed up to TSS are still thinking about it or are very much keen to sign up now. So I hope this webinar has been useful to everyone who signed up today. But thank you, Steve, once again for that presentation. It's been a short webinar and a very technical topic, but I hope everyone has found that introduction valuable. Just a reminder that to register for the Trader Support Service, please visit tradersupportservice.co.uk. And you can get more educational courses and guides as they are released on the TSS-backed Northern Ireland Customs and Trade Academy website at nicustomstradeacademy.co.uk. But for now, that's all from me and Steve today. I hope you found that useful and hopefully see some of you again at the next webinar. Thanks, everyone.
Thank you.